Good morning, everybody. I think we have more than 20 participants and we can start, right? So let me just start off this session by giving my commentary on, what do I think about the current situation in markets, and just for 5 minutes. So I would like to take a slightly longer term view, and let's go back to 2008, the global financial crisis, right? So everybody, almost all of us do remember that, most probably. The global financial crisis. It was one of the worst financial crises in almost entire century after 1929 depression. So the immediate response of all the developed market central banks was to print money and just buy the bonds and rescue. They let Lehman Brothers fail, but after that they realized that if we let other companies also fail, like investment banks or insurance companies, the entire financial credit market will go into a freeze, and it will be the worst disaster in probably several centuries. So basically, they rescued all the institutions, printed insane amounts of money. The criticism at that time always was, when you print money, it will result in inflation. It will result in inflation, right? So what ended up actually happening was that inflation never came. So there was this, so even big Nobel laureates, right? Not just normal people or normal economists. There was huge debate about whether if you print money, what will happen, why inflation will come back. US had a very bad stint with inflation in the 1970s because of the oil shocks, right? So since 1982 to 2020-21, for 40 years, interest rates have been falling in the US. For 40 continuous years, right? Interest rates were almost as high as 17-18% in 1982, which fell to absolute 0% in the US in 40 years. Now what happened when 2020 came? The immediate response of all the central, developed market central banks was to again print money. And this time, because no financial institutions were in trouble, they gave this money to the people, right? They printed a lot of money, bought a lot of bonds, increased the liquidity. There were direct cash transfers to citizens, non-citizens, even PR holders, all working people, everybody, right? So again, the wisdom was that, the understanding was that because printing of money has not caused any inflation in the last 12 years, if we print money again, why will inflation come back, right? India's response was very different. So what India said was, so again, there was a huge pressure on India by all the Indian Nobel, so-called Nobel laureates and big economists like Raghuram Rajan, Amartya Sen, Abhijit Banerjee, all these guys, that you print money, distribute to everybody. But what Indian government and Indian economists said, those in the government, right? Like Principal Economic Advisor Sanjeev Sanyal, that Bipek Debroy, and all the others, right? They said, even if we print money and give it to people, where will they spend it? And what ends up happening in a situation of crisis is that people tend to save. Whatever they have, they tend to save. They don't want to spend. If people don't want to spend, money does not circulate. So if you print more money and give it to people, then whether that person is rich, poor, whatever it is, his first propensity is to save that money for worser days or more dire situations. So what essentially happened was, we took a different stance. We said we will give free food grains to 80 crore people, which means we don't want any starvation deaths. And we did not have any starvation deaths during Corona, right? We gave very minimal stimulus packages, namesake kind of things for specific sectors, majorly focused on increasing the supply capacity. So put up new factories, develop new supply chains, get ready for a post-Corona world. Corona will be here for whatever time, 6 months, 1 year, 2 years, 5 years, whatever it was. The understanding was post-Corona, we should come out stronger. Now, so what has happened is, if you see entire developed world, the inflation is actually higher than India as of today. Now, this is completely uncharted territory for them. Inflation basically kills the economy for the developed world. They are absolutely not used to it, right? So now after 2 years, the central bank in the US has now started fighting inflation. So from zero and negative interest rates, now interest rates have gone up to as high as 3%. So if you have friends in the US, what you will realize is that not only the housing prices went up like 30, 40, 50%, even more, but literally those who are on floating rate interest rates for their home mortgages, literally the mortgage payment has gone up by 50, 60%. So what mortgage was available at 2.5% has increased to something like 6.5%, which is a huge jump, right? So in my opinion, the bear market in the US is not over, right? The problem with the US and the developed world is that they have to stop printing money. They have to raise interest rates. Politically, it is very difficult to keep inflation on or to fight it so much that you raise interest rates so much and kill the demand so much that the economy suffers substantially. So what will in a way end up happening is that they will keep raising interest rates in bits and pieces over a long time, and inflation will probably not get killed too easily, right? If you look at any previous bear markets like 74, 2000, 2008, all those bear markets, the main index of these countries kind of fell by 40, 50%, right? What do I expect in India? In my opinion, India is in a much better position. We are politically much more stable. We are at the right demographic age. The world wants to diversify out of China. Nobody is going to stop their factories in China, but the new factories that will come up will probably have a bigger incentive to come up outside China. India is already a major beneficiary of these of this kind of geopolitical strategies. Plus, India has arrived on the world stage purely because, say 10 years back, we were I think number 7, number 8 kind of an economy, right? So we were emerging, but now we are number 5, I think, right? So that is much more. We are much bigger, and we are willing to take bigger responsibilities now. The big benefit in this cycle that India has is that today the IT exports are higher than oil imports for India, which basically means whatever happens to the oil price, we are not going to face any forex currency problems, which was not the case in the last crisis. If you remember around 2012, when again oil prices had gone up above $100, India suffered quite a bit. The currency depreciated substantially, and we were in trouble. Inflation was very high, currency was depreciating, growth was struggling, plus of course forex problems were there. These problems are not there for India. Having said that, in my opinion, Indian markets cannot remain decoupled. So what may happen is the world economy can shrink from 100 to 95, but India is only 5, 6 of the world economy, right? It's a substantially, it's a relatively smaller economy. So India can grow from 5 to 6, which is like a 20% jump for the Indian economy. But the world economy can shrink from 100 to 97 or 98 or 96. So the global economy may shrink, the developed world may shrink because of a recession or whatever, but the Indian economy can grow. But what it means is that markets are also determined by the liquidity that is there. The absolute. So in monetary terms, what money is there to buy assets? So there is going to be substantial asset deflation in the developed world. I don't think there is going to be a 50% kind of a correction. It's really outlandish in India, but 10-20% correction can easily happen. So where we are in the cycle. So a couple of things I would like to show you. So if you just go to see something like this, okay, I'll show. So this is a list of all the best performing mutual funds in India over the last 10 years, right? So I'll just apply these filters. These filters have got eroded. If I go to the category, I select all equity funds, right? And I go to regular plan, apply. Right? So yeah, this is a list of all the top performing mutual funds ranked based on their 10-year returns. So if you see, the first is SBI small cap with a staggering 25% CAGR returns. Now the 10-year returns for the Nifty index are about 12-13%, right? If you see the second, again, Nippon India small cap fund. Mirai Asset Emerging Blue Chip Fund. So this is now not a small cap fund, but it started out as a kind of a small cap, mid cap fund. Again, see, small cap fund. These are not small cap funds, but again, emerging equities, mid cap fund, mid cap fund. So basically the top 10, 6 to 7 of these mutual funds are basically small cap funds, right? So valuations in the Indian markets are not low, in the lower half. They're definitely in the upper half, probably in the top 20%, 25%, right? If you look at some of these companies, right, you just look at any of these good companies which have given great returns over the last 10 years. So I'm just showing you the Asian Paints returns, right? So if you look at Asian Paint return 10 years back, it was 381. This is, you know, it's now like almost 10x in 10 years, right? But what has happened is the PE ratio, which was about 36, 37 at that time, has gone to 90 for Asian Paints. So literally like more than half the returns have actually come from an expansion in the PE multiple. Now it is simple arithmetic that, 10 years hence, 90 is probably not, a price earning ratio of 90 is not going to go up to 180, especially in a world where interest rates are increasing around India. So Indian interest rates may not go up so much, but it's very unlikely that if US is increasing interest rates to 4%, 5%, 6%, Indian interest rates are going to go down. The gap may reduce. We may only increase by 2% when the US increases by 4%, but interest rates are not going down in India as such, right? So this is what my thought of the current market is. Now let me come to what to do with your portfolio, right? Should you sell? Should you buy more? What you should do? So that's frankly what our view on the markets is. Does not have any direct correlation to what we should do with our own portfolio, right? Why, I will tell you. So I'll share two examples of companies which are there in my portfolio. So I'll just show this company. This is a company, Wonderla. I think most of us might be knowing it. It runs amusement parks in Bangalore, Hyderabad, and Kochi. It is a sister concern of V-Guard Industries of the Kerala guys. So what happened was, so my entire thesis of buying this in one sentence was, opening up will happen, Corona will go away, people will come back to their parks, right? For 2 years, they have been struggling massively. Nobody has come to their parks. But when the reverse or revenge tourism happens, more number of people will come to their parks and they will be willing to pay higher prices. Now, what happens in this kind of a business is that the costs are historical. So instead of 1 lakh visitors, if 1,20,000 visitors come, you don't need to spend extra. Probably you have to just recruit some cleaners, helpers, and that kind of stuff, right? Minimal. So most of the costs are historical. Operating costs are very low. So there is extremely huge operating leverage playing out. So if you see, in 2020, their profit after tax was 65 crores, right? Before Corona, 65 crores was their profit after tax. If you look at the latest quarter here, in just one single quarter, they have made 64 crores of profit after tax. So just because 10-15% extra people came, their profits zoomed substantially. Now, for a little more than 1 year, I was just holding on to this company without any returns, absolutely zero returns. And the entire returns, right, literally from 240 to 400, which is like how much? I think some 70%, 60-70% returns have literally come in the last 40-45 days, maybe 60 days, right, in 2 months, August and September. So the markets are in trouble. There is a huge fear that the markets will go down. But you see, this stock has gone up. So, sometimes your portfolio company will go up. The second, so I'll just share the screen again. And so the second company I want to show you is, again, I think KRBL. I have been holding this company since 2018, right? So I have not made much returns on this company. But if you look at it, because commodity prices are increasing and whatever other factors are there, which I would not go into right now, this company has gone up from 201 in June, right? June, July, August, September. Within 4 months, it has gone up to something like 373. So again, 80% returns in 4 months, where there have been huge, let's say, problems in the global economy and fear that the markets will go down. So it doesn't mean that you have to, sell out stocks or whatever it is. In my opinion, buying new stocks has to be more cautious. We have to become a little more conservative in our asset allocation. So if somebody is 90%, 100% only into equities and, is totally gung-ho, I think tempering of expectations and a little more conservative asset allocation is the way to go. As a principle, I never sell stocks because I think the market is going down, right? That is what I never do. The only response that I have is if the stock price is correct, if the market corrects, and I still have the same assessment of the companies that I own or do not own, I go ahead and buy. So when the markets fall, I buy. I never sell when I feel that the markets are going down, which today I feel that the markets should go down, right? So I think I'll like to open up for questions and answers so that I am able to address individual queries. So please, Anand has raised his hand. Let Anand start start with asking the question.
Yeah, thank you, Amey. For a out and out mutual fund investor who does not track market actively, look at the stocks going up and down, specific stocks and all, what would you recommend at this point in time? Is this a time to add more to the selected mutual funds in the portfolio? Or should one wait for maybe another 10% from here or 20% from here? Like you said, it will not go down to 50%. That's outlandish. But what would you recommend to a mutual fund investor at this stage? So
I'll give you generic thoughts on this because it will completely depend on your specific queries. If you have specific queries, please write me an email. I'll also, we can also discuss offline. But let me give you an opinion here, right?
Yeah.
So are you salaried?
Yes.
Right. So you earn monthly, save monthly?
Yes.
And you do SIPs?
No, I don't do SIPs because I try to do sort of opportunistic SIP in a way, like not a fixed monthly SIP, but when I see that market is going down maybe 5-7% from my last purchase or all-time high, then I sort of put some money that I accumulated over a few months. That's how.
Then your process is that when the markets are down more than 10% from their all-time highs, I will put my money, right? So you
Correct,
don't do regular SIPs.
No, I don't do regular SIPs. You're right.
So is it more than 10% below?
Not yet.
All-time highs.
No, I mean all-time highs, yes, but recent highs से 5% अभी गया है नीचे roughly 5%.
5% ही गया है ना? तो you what process do you? So what I'm trying to tell you is this: you set a process. What may happen is that in that process for 3 years you will never get an opportunity to do an SIP.
Yeah, possible.
It's still possible. Wait it out.
Yeah.
So wait, if your process, so some people have that process every month, I will do an SIP. So then you have to stick to that process. The worst that will happen is you will make slightly lesser returns, right? But if you keep doing it for 10-15 years, you end up with a substantial corpus. The problem is during these times of uncertainties, we want to deviate from the process because we think, maybe कुछ और अच्छा कर सकते हैं.
हाँ.
ये कुछ और अच्छा करने के चक्कर में जो हाथ में है वो भी निकल जाता है.
Okay.
So if your process is that, okay, I'll only invest when the market has fallen by 10% or more, then you wait for it. Maybe for 3 years it will not fall. So be it. Maybe it will fall within 3 weeks. Then you please invest. But what I'm trying to tell you is there is no point in predicting whether it will fall by 10% or not.
Right.
The point is, if it falls, please do your SIP.
Okay.
Don't, after it falls by 10%, don't wait. No, I think it will fall another 20%. So I will wait for it and then do. So then if you feel that way, you please put half your SIP after 10%, put half your SIP after 20%.
Right.
Or you double your SIP after 20%. Right?
Yes.
So you stick to something like that.
Right. Okay.
So yeah, I think Bhushan wants to ask. Yeah, so let Bhushan go ahead. Some of you are typing it out. Sachin, is that Sachin Abhyankar or who is that? So you also want to ask some questions. So I think let Bhushan ask his question, then Sachin can ask.
All right. Okay. Thanks, Amey, for giving me this opportunity. I have just a couple of questions. Like one is from the IT perspective. Like we have this dollar going up against the rupee, so it is a normal assumption that way if the dollar goes up, then the IT companies, the profitability of the IT companies will go up, not the profitability in terms of rupees, but at the same time we are also seeing that there's a recession news in US and Europe. So how do we play the IT stocks? That's one question. And other is the now with the interest rate going up, would it be wise to allocate some part of our portfolio to debt mutual fund? If yes, which one? Short term, ultra short term, and all those things. Thank you.
No, what is the second question? Sorry.
It's with the interest rate going up. Usually, we read that now you should get allocated to a liquid fund or maybe short-term funds, and it'll give a better return. Like I have 20% of my portfolio in debt, and 80 or maybe 75 in equity. So the debt part का क्या करना है? Whether we should stick to corporate bond funds or go to ultra short-term funds and all. In current scenario.
So see, IT, in my opinion, what happens is that so let's observe the trend. What happened in IT was because of that sudden jerk or a stop like COVID, many realized that I need a digital strategy, digital presence. My digital presence has been lacking. So I quickly need within 1, 2, 3 months, I need to upgrade. A lot of these businesses which were behind the curve now suddenly wanted to be ahead of the curve in terms of digital capabilities, right? Normal businesses. So there was huge work which was squeezed into for IT companies post-COVID, which basically meant they could increase their prices. So instead of doing the same work for say $1 million, many were willing to pay them $1.5 million at that time. The huge problem in 2021 was there was not enough talent. There was not enough people and time to get these things executed. So in my opinion, most of these IT companies have inflated earnings. Just don't always assume that the earnings will only keep increasing. Right? The amount of work has reduced, costs have increased. Once the salaries increase, it takes a lot of time for the adjustment to happen. Okay. So the assumptions on, it will all depend on individual companies, but the assumptions on secular growth rates in revenues or profits have to be revisited. Number one. Number two, depreciation of the rupee is only a short-term thing. What happens is whenever you go for a renegotiation of the contract, like contract expires after 1 year, so you want to renew it. When the renewal happens, renewal doesn't happen because at the rupee at 75. Now they will say, boss, you made a profit last time because rupee went down from 75 to 81. If you want me to sign this contract again for the renewal, then you have to pass on this margin to me. So what happens is it's only for 2, 3, 4 quarters that the effect of the rupee depreciation is seen in the IT results. Whenever contracts come for renegotiation, they will get renegotiated at the whatever price is there, right, for the dollar. Now your question about short-term bond funds or what? Yeah, typically if the outlook is strong that the interest rates will go up, then you should be in shorter term maturities. Outside of gilt funds, don't go for long duration gilt funds. Typically try to be in shorter term liquid funds. I mean shorter term whatever debt funds. But it's not that obvious. I mean, in my opinion, interest rates going up is not that obvious because there is strong indication that India will get included in the global bond index. So RBI and the Indian government have been extremely wary about letting a lot of foreign money come in to India, right? So there are a lot of capital controls, especially for the debt market. So they don't want the foreign money to come and invest in India's debt market. So a lot of controls, registration, reporting, taxes, lot kind of stuff is there. Now India is slowly opening up over the last 5-6 years that if we want to become one of the bigger, better economies in the world, and we want to occupy that stage, then rupee has to be convertible. We also need to open up to foreign fund flows into a debt market. Now, if this dollar flows into Indian debt markets, then I don't see interest rates going up substantially for us, right? So you may want to check how strongly you feel that the interest rates are going up. Second, see, inflation is not such a big problem in India. Our priority is growth. It's not fighting inflation. Indians are used to inflation, you see. Indians are used to higher inflation. It was only between 2016-17 to 2021 that inflation was low in India, right? But in general, Indians are okay with 5, 6, 7% inflation. Not a problem. Right. I think Sachin, you want to ask a question?
Yes. So Amey, earlier we saw that there was deflationary environment. Interest rates were going down. Now reverse of that. Inflation is going up. Banks are increasing interest rates. So now the companies which were debt ridden, earlier they benefited from interest rate going down. Their interest payouts were going down and down. Now groups like Adani, they are so debt ridden. Do you think they can pose a systemic risk to the entire market? Or what are the signs that we have to look for that are like red flags that this can bring the whole banking down, or maybe systemic risk, or is that not a possibility at all? That is first. And I have one more question.
You ask this question, let me answer this, and then you ask your second question. So the entire NPA mess of between 2010 to 2017-18, right? PSU Bank at 2020. You look at IDBI Bank, Bank of India, and those kind of banks. 20%, 25%, 30% NPAs on corporate debt. उससे कुछ हुआ नहीं, banking sector जिंदा रह गया तो ये अडानी क्या कर लेगा?
Can it be like Lehman for us?
No. So never say never, but the point is, I don't see that. See, secondly, you look at where the debt in Adani is. Which companies does it have debt? Does Adani Ports and Mundra SEZ have debt? How much debt that company has? Not much, right?
Yeah. Few of them are not having much, but as a
debt
group.
Is there in which company? Adani Green Energy. Massive debt. But वो Adani Green Energy का क्या रहता है? 25 साल का PPA रहता है. Right? So 25 years, revenue is constant. So there are clauses in the power purchase agreement that if something happens to Adani Green or basically the power producer, then the government has to, the distribution company, the counterparty to that agreement of 25 years has to pay off the lenders.
Okay.
So the risk is never there on the power developer. Power developer अगर डूब गया तो भी Discom has to pay to the bankers. Bankers को पैसा मिल जाता है.
Okay.
So उसने extreme leverage वहीं पे लिया है जहां पे it makes sense to leverage.
Okay, so it's a good thing.
See, he is overdoing it in my opinion. Okay. But don't look at the debt to equity ratios and that kind of stuff and be too much alarmed, because it's possible to leverage up in those kind of businesses.
Okay. So not a big worry for entire market as such, right?
If he comes out with a rights issue or a follow-on public offer, people will give him so much money, man. What did Ruchi Soya do? वही किया ना?
Yeah.
कोई यही नहीं था. They kept on, the price like kept on going like mad, and one fine day they came out with a falling public, I think 4,000 crores or something they raised from the market, right?
Yes.
One day entire debt repaid, no tension.
Yeah, that is another option they have. Correct.
Which they will manage. So in my opinion, it's not a systemic risk. We don't need to worry too much. Will I invest in Adani stocks? Please no, I can't. I don't understand what is happening, right? I want to make money because my analysis was good, so that it's not a one-time thing for me. I can keep making money for a long time because because of my analytical skills, or whatever investing skills. I'll never touch Adani.
It's about selling, when to sell.
Yeah.
Because if we think that market is going to underperform, say for next 1 year, why not book out some profits? Because in last few months, all markets were going down, only we were going up, and we were in non-sync, or some word the media use, like we are detached from global economy, we are going to perform very well and all that. But obviously one can logically say there is going to be some impact, because if money is not flowing in the world economy, and if everything is going into recession, how can India flourish?
I'll give you that answer. Okay, the precise answer is because I showed you that Wonderla, right? So if somehow somebody had just sold it out of in May, thinking that markets are going down, US is going down, all that things is happening, basically you missed out on 70-80% of the upside, right? Second, if you actually analyze, for 10 years, just go to the index, say the small cap index or the Nifty 50 index or whatever. The 30 best days over 10 years, which is 3,650 days, right? The 30 best days end up giving you something like 70-80% of the returns, or some huge number of the returns, right? If for some reason we miss out on those 30 days, then suddenly from a index return of 13%, our return will start looking like 3%, 4%. So if you are in direct stocks, in my opinion, the best strategy is to be always remain invested. The second is, if you want to do that, you should be able to and willing to buy more if the stocks fall, right? So you should have that kind of money. Third, if you are in mutual funds and your asset allocation you are uncomfortable with, right? So if you are like 90% into equities, you very strongly feel the markets are going down, then you can withdraw 10% of your funds, right? So raise cash, that's fine. But that is more for your psychological comfort. In the sense that if the markets actually end up going 20-30% below, then you have some money left so that you can buy more, something like that, right? But in my
why
opinion,
I'm asking this question is like, there is a specific reason behind it. I bought a lot of stocks during that Corona bottom, like ITC I got for 170 rupees, Jindal Steel for 70 rupees. Now they are like flying high, so I'm becoming uncomfortable. Like, are they really that valued, or it's a luck?
you sell because valuations have gone up substantially above your comfort zone or your assessment of the business, rather, let me put it that way. So if you don't think that ITC should be trading at 25-30p or whatever p it is trading at, right, you should lighten up. That's correct, right? But if you have bought HDFC Bank at 100 rupees 15 years back, and now you want to sell just because the markets are going to go down, don't do that. But you have bought into Jindal Steel, which is not an HDFC Bank. So for Jindal Steel, good days come, bad days also come, right? During bad days, it falls by 50, 60, 70%. So bad days are going to come. Last 2 years were very good, which were exceptional. please sell at some portion of it. So this is stock specific selling. It's not necessarily only valuation specific selling. If you have bought you got the point, right? If you have truly bought a compounder machine, then even if it falls by 50%, you should not sell. Right?
Okay.
But if you have bought
No need to time the market.
It's okay. You can never time it to perfection, right? In the sense, what you are saying. So if you are into Asian Paints, HDFC kind of stocks, or you are confident about the future growth and all that stuff, there is no need to time the market. In fact, you should buy more if the stock corrects substantially, right? That kind of a company. But a Jindal Steel or Steel Authority of India, those kind of companies, you buy low, sell high.
Okay.
If you buy Yes Bank, buy it in 2009. See, if you buy Yes Bank, buy it in 2009, sell it in 2017. Right? But if you have bought into Bajaj Finance, even in 2015, the time to sell is never.
Okay.
Right? So yeah, I think Sumit can ask his question. Sumit Mahata.
Hi, Amey. Yeah, am I audible?
Yeah, you are audible. Yes.
Hello.
Yes.
Yeah. So Amey, thank you for the session. And I also congratulate you because your calls has been exceptional, specifically with KRBL, UG1, and I have definitely benefited out of your advisory. Thanks a lot for this. Amey, I had some specific question about, first of all, IEX and how do you look at IEX in general? And because you used to own and that was a substantial part of your portfolio as well at some point of time. So it has also corrected, and there are a lot of reasons to that as well. So one specific question with IEX, and another thing, in general, what do you see the better sectors to look at in the future, and if and to add more if the market corrects.
Yeah. So IEX, I'll briefly answer. See, I think before 2020, it probably was a slightly undiscovered kind of a stock, right? Maybe. Not many institutions owned it, not many retail investors owned it. So it was probably an under-researched kind of a company. Second, see, growth in IEX is never going to be smooth every year. So what happens is typically some reforms happen at the government's end. Some regulations change. Typically, whatever changes happen in the power sector, what ends up happening is that it ends up aiding the power exchanges. So power exchange is the only thing that is working correct in the power sector. So any regulation rule change happens, basically, the government wants to make sure that what is working well, more transactions are basically routed through it, because that is the best and the most efficient thing that is happening in the power sector. So there will be spurts of growth. Suddenly 1 year, the volume will grow by 30, 40, 50%. Then the next 2 years will be lackluster. Maybe the volumes will actually drop by 10%. Right? That is what is happening. If you see the last 3-4 months, volumes have actually dropped for whatever reasons. It's not permanent, but they have dropped slightly. In these times, the P ratio contracts. Right? So from 80-90 P, the P ratio has come down to 43, which is still not like very cheap. Right? Second, so many institutions now own it. Right? So it has become a more of a discovered kind of a name. Having said that, I think the long-term growth story is still very intact. A lot of changes are happening at the government's end and in the industry structure, which give me great optimism about the growth in the revenues and the growth in the this thing. So a couple of things. Basically, there is something called general network access and transmission, right? That is a huge benefit for IEX. The next big change will come when merchant power plants in the renewable energy sector will become a reality. So right now, renewable energy is also sold on 25-year long-term contracts. Hopefully, banks will get comfortable funding merchant power plants in the renewable sector. So for example, there is no long-term contracts for a steel plant, right? But still banks finance it. But banks ask for a 25-year power purchase agreement from a power plant to finance it. So if the system comes that entire electricity is sold on the power exchanges without any long-term PPA, and still banks are willing to finance such a renewable energy project, that will be a huge spurt in growth for IEX. That will be a game changer, big game changer, right? It will definitely happen. Will it happen in next 6 months or 3 years? I don't know. So we'll have to be on the lookout. That is what it is. I think you have a few more questions about what sectors and this, that, to general gyan hai.
Yeah, specifically, I mean, specifically with the financials, because as you, I mean, there has been a good credit offtake. The credit cycle has started.
Industries are doing good. So, the question is where you have to study a specific companies, and if you like those companies, you buy it. It's not necessarily because, so the way I go, it is not because, you know, I want to own something in the capital goods sector, so मैं कुछ तो company ढूंढ के निकालता हूँ. एक तो company capital goods वैसा नहीं है. So I will just pass that question that you asked, which sectors and this and that, right? ठीक है, everybody is talking about those sectors.
Okay, that's great. Right. Yeah. Thank you, Amey. Yeah.
Okay, so I think Pratik, you want to ask your question?
Yes. Hi, Amey. Firstly, thanks for doing this. I think it's of deep value for, I think, everyone here. You know what you've been doing for investors like us. Sir, in fact, I have two questions. The first is, what is your view on the rural economy? Like, I know, like, there's been a lot of stress in the last 2-3 years, even before that, with ILFS and DMON and all that. But where do you see it going from here? You know, right now also it's not completely recovered. A lot of talk is there, but recovery is still yet to happen completely in the rural economy. And secondly, with regards to the MFI industry, you know, there's so much of talk around that, that investment is going, banks are getting into it, NBFCs, everyone. When there is so much of enthusiasm about, you know, an unsecured lending per se, do you feel that the efficiency of lending practices would kind of go down because it's unsecured, you know, so to get more volume, to get more customers on board, you know, will it not lead to, you know, banks and institutions just kind of finding more customers and kind of compromising on, you know, the quality of, you know, customers?
So I'll take that second question first.
Yeah, these two.
I'll take the second question first. What is happening is microfinance or any, especially microfinance or any other lending, more or less works in cycles. Okay? Some cycles are shorter, some cycles are longer. The fact is that 2020-21 were one of the worst for microfinance industries, right? Horrible. 10, 12, 15, 20% NPAs, restructured, nobody's paying, 70%, 60% collection efficiencies. Nightmare tha, right? Somehow they survived because of moratorium, you know, loan repayment moratoriums and all, so many other, you know, these things. So in my opinion, this upcycle will continue for 2-3 years. So abhi to shuruaat hai upcycle ki. I don't think in the microfinance ke upcycle mein we are at the fag end. See, if more people jump in, so the reality is also that almost all microfinance borrowers have 2-3 loans, right? So they have loans from multiple people. Plus they may even have gold loans, some of them, right? बाकी कहीं से नहीं मिलता है तो चलो gold loan ले लो. मतलब 2 loan already चल रहे हैं. कोई vehicle loan चल रहा होगा, home loan चल रहा होगा, microfinance loan चल रहा होगा, family का, right? उसके बाद जाके आप gold loan भी ले रहे हो. So in general, the industry, I think the public are slightly over leveraged in my opinion. But I also feel at this moment that the microfinance upcycle has just started in the last 6 months. 2-3 साल तो चलेगा. ठीक है? Second,
Okay.
rural economy,
Okay.
why do you ask that question? What is the impact? What decision do you want to make?
So I am invested in companies, which are exposed to the rural economy more than urban or metros. More in the lending space basically. From that point of view, we've been hearing that rural economy is picking up, but अभी भी स्ट्रेस बहुत लगता है, चाहे वो अगर आप अफोर्डेबल हाउसिंग देखो, उनकी बुक्स देखो, या इवन गोल्ड लोन देखो, if you hear the management talking about it, though lending, obviously gold loan picked up after 2020 because gold rates also kind of went out of the roof, and plus people didn't have any other lending options, but wo bhi abhi, at some point of time it's kind of stagnated right now, so मतलब all in all मेरे को लगता है rural economy, I don't know, I'm a little confused, so that's
No, I
why I
think
was
in my
kind of
opinion, you
asking.
don't have to base your investment thesis on whether the rural economy is booming or not booming. That is what I feel, right? So you have to pick up companies which either the softness in the rural economy is already getting reflected in the valuations, right? So whenever the rural economy picks up, the valuations will also improve, credit growth will improve, sales growth will improve, profitability will substantially improve, right? Or you have to go to companies which, in spite of soft or buoyant rural economies, will continue to do fine. So the point is this: in a bad economy, if your company is doing fine and you are okay to hold it at that valuation, when the good times come, the company will go up 2x, 3x, 4x.
Hello.
If you end up making 3x in 4 years or 6 years, it's still a decent.
I think we lost you.
Okay, sorry. So what I'm saying is, you want to buy into companies which are doing better than average or better than good, right? Which are doing good in spite of the rural economy being bad or good, and the same being reflected in the valuations. Like you mentioned, gold financing, right? So yeah, I think, I am back. Are you guys able to hear me?
Yes.
So
yes.
yeah, Pratik, I was just saying, I'll just repeat what I was saying. The point is this: you want to buy into companies and at that valuation where the softness in the rural economy doesn't bother you.
Okay.
At some point of time,
yeah, I think that's
2 साल में टर्न होगा, 1 साल में टर्न होगा, 4 साल में टर्न होगा, ठीक है, right? Sometimes, what ends up happening is, if you are wrong on this prediction of the rural economy coming back and all, instead of 20% CAGR, you end up making 10-12% CAGR, which is not very impressive, but ठीक है यार, पैसा डूबा तो नहीं. ऐसे situations में, right, where you will not end up losing 20% of your capital after 3 years. ऐसा companies में मत जाओ, because predicting this economy is really difficult, है ना? बहुत बार क्या होता है, खराब चीज होने के बाद अपने को पता चलता है ये प्रॉब्लम था, वो प्रॉब्लम था, because we don't have those kind of sources of information. So you want to buy into situations and companies and those kind of things where, if unexpectedly some bad things happen for the environment, you are not you don't need to sell out. ठीक है, you endure the pain for 2 साल extra hold कर लो, things will be fine. Something like that.
Okay. And one last thing that I think is also a favorite question that I'm sure people will be asking a lot with regards to gold loans. Where do you think we are right now, if we talk about the gold loan space?
So yeah, I think somebody else was also asking about Manappuram. So I'll put it this: in my opinion, the competition has substantially increased in gold loans. Okay. Almost everybody wants to be in gold loans now, right? So what is happening? But it's still a profitable venture. It's not that it's not a profitable venture. It is a profitable venture, right? So gold loans are profitable. So you look at Manappuram, Muthoot, both their prices have corrected substantially. So the question is, at this price, are you okay with certain impairment in profitability? Right? Gone are those days where they will make 25%, 30% ROEs. So now that return on equity is a little lesser at 14, 15%, right? So Manappuram, I remember they used to make like 400, 500 crores of profit every quarter. Now they make 250. It's not going to go into losses. But agar 250, so price to earning ratio for Manappuram is 8, 9, price to book value is 1, 1.1. So are you still, for a 15% ROE business, do you still want to own that kind of a company? That is your call. Second, the better way to play out Manappuram, companies like Manappuram or Muthoot is when the gold prices actually substantially decline. What ends up happening is other players suffer quite a bit. So if you analyze the period between 2012 and 2018-19, 2012 was the last peak in the gold prices, right? And gold prices literally fell like 40% or something after that over the next 4 years. Everybody else, including Shriram City Union, IIFL, and so many others, were like decimated. Their gold loan book literally reduced by 80%, 90%. They kind of came out with, we are stopping gold loans, that kind of stuff. Manappuram stock price fell by 70-80%, right? जब ऐसा होता है, so then you have a longer time horizon, have a 6-7 year time horizon, and keep buying a company like Manappuram or Muthoot every month. So whenever after 7 years the price becomes 3x, 4x, 5x, because your average price is so low, you end up making a lot of money. And there you don't have to think too much. So these are extremely solid, great businesses, fantastic processes. Everything is set for Manappuram Muthoot, right? So you play the opposite. Gold prices girta hai, competition substantially suffers. These two come out winning.
Yeah, like right now gold prices thoda sa, it's kind of wavering. So you can see that banks की भी statements थोड़ी change हो रही है. वो भी कह रहे हैं कि जितने aggressive थे last year तक, now it's kind of you can hear that aggressive stance is changing.
Stance is changing. अभी फिर भी इतना प्रॉब्लम नहीं है. प्रॉब्लम तब आता है और 20% गिर जाए ना गोल्ड लोन, तो देखो क्या होता है. अपना गोल्ड का प्राइस, सॉरी, व्हाट आई मेंट वाज गोल्ड का प्राइस और 40,000 पे आ गया ना अगर, तो देखो फिर क्या हालत हो जाती है उनकी. ठीक है,
करेक्ट, done. That's from my side. Thank you.
Who else wants to ask? Please raise your hand. So some people had written a lot of messages in the chat. I think, because my internet connection was not good and I went in, went out. I think I have lost all the chat messages. So if any of you wants to ask that question, please. Somebody is asking, what is your next high conviction bet tracking? ऐसा कुछ नहीं है यार. When I write about it, I'll write it on my blog, so you will get to know. ठीक है. Right now, I don't have any new company to share over here, and the purpose is also not to share specific stocks that I'm currently investing in. Right? These are general discussions where I would like to share general knowledge. I am happy talking about specific stocks, but this is, I think you are asking for too much direct investment advice. So yeah, I think someone is asking, how does the sectors like paper, rice, etc., which are facing tailwinds because of lack of competition, will perform when the overall markets will fall? Do these companies still get investors' interest? So Mukul, do you have any specific company in? So paper is not a moated business, right? It's not a branded business. Whenever the prices, the cycle turns, the cycle will turn. It's a cyclical sector, cyclical company. So please play it that way. Buy at the bottom of the cycle, try and sell it somewhere at the top. Right? Rice companies, any specific companies you're talking about, then I'll be able to answer. Do you want to unmute yourself and ask this question, Mukul? Okay, so Mukul is also facing. So his second question is: everyone is bullish on the Indian financial sector as credit growth is growing after so many years. How the financial sector will get impacted if Western world goes into recession? I don't think there is going to be a big impact. The credit growth may reduce to the industry, so that is something to be seen. So the point is this: you don't look at variables which are hard to predict. अभी क्रेडिट ग्रोथ कितना होगा, 12% होगा या 18% होगा, अगर वो यूएस रिसेशन में जाएगा कि नहीं जाएगा, जाएगा तो माइल्ड रिसेशन में जाएगा या डिफिकल्ट रिसेशन में जाएगा, वो सब आप प्रेडिक्ट करने की कोशिश मत करो. अभी आप यू बाय इनटू सिचुएशंस वेयर द प्राइसेस एंड द सिचुएशन रिफ्लेक्ट्स एक्सट्रीम पेसिमिज्म and you're confident that at some point of time the turnaround will happen. Like that is what I did with Ujjivan. Right, Ujjivan, I was very confident that it's not such a bad company and the turnaround will happen at some point in time. The prices are like really cheap and the market is thinking ye to khatam ho gaya company, right? So that is where I bought into it. Now if you ask me today, somebody is asking me, should I average up in Ujjivan? It's so I don't want to answer that question because that directly directly amounts to giving investment advice on a public forum like this. But I will put it this way, buying Ujjivan at 120 rupees, 140 rupees was a much simpler decision 6 months, 8 months back than trying to buy Ujjivan today at 220 rupees. Right? Having said that, I think the problems are definitely behind for Ujjivan. They have raised tier 2 capital, they have raised QIP equity capital as well, 475 crores of equity capital, 300 crores of tier 2 bonds, which gives them substantially better capital adequacy ratio. It's a much stronger company today than what it was 8 months back. 8 months back, I was anticipating that these things will get done. I didn't know when. Will it take 3 months? Will it take 1 year? So it ended up taking 8, 9, 10 months for them to get equity capital and tier 2 capital. So today it's a much stronger, better company. So you have to really think about your own investment style. Do you want to buy into pessimism when the prices are very cheap? Or do you want to wait for positive things to unfurl and then you are happy buying at higher prices? So that's a very personal decision that you have to take. Okay. So that's my answer to somebody who is asking whether they should average up in Ujjivan stock. So Ravi, do you want to unmute yourself and ask your question?
Yeah, sir. Congratulations for the the KRBL, which has been gone up 100% from the last 6 months actually. So I just want to check with you, sir, ki, right now Adani has bought the Kohinoor brand, and so many big players is coming in the rice market as well as, and being the food prices on a sticky inflation is there. So where do you think that the big player in like KRBL or LT Foods will be placed like that actually?
Yeah, I think both LT Foods and KRBL have a very good brand. It's not that easy to displace that brand in the Basmati segment, at least. Okay. Even though Kohinoor is also a good brand, I don't think these businesses can so easily be built with just money. Okay. There is so much more that goes into building these brands, and especially these thin margin commodity kind of product. So Adani entering with the Kohinoor brand is definitely increasing the competitive intensity. But I am not worried as such in the sense that suddenly the others will start losing market share big time to Adani or something like that. Okay. What may end up happening is that more of the unorganized sector will actually get transferred to the organized Basmati sector. That may also happen. So the overall market size may increase. Right? That is one of the possibilities.
Okay. So what about the sticky food inflation? Actually, the price is going up. Last 6 months the food price is going up like anything. So that will be a benefit to the inventory, which though everybody who is having a good inventory.
Yeah, जिसने सस्ते में खरीद लिया 2000 करोड़ का इन्वेंट्री, उसको तो बल्ले बल्ले ही है ना. 300-400 करोड़ तो इन्वेंट्री गेन से KRBL के लिए इस साल में. 300 करोड़ का तो बाकी वो प्रॉफिट अलग, 300 करोड़ का तो इन्वेंट्री गेन है.
Okay. Yeah, thank you.
Next year they will have to buy at much higher prices and then again try to sell at higher prices. So that's a difference.
Correct. Thank you.
So I think Milind Karandikar has some questions. Milind, just write me an email. I'll directly connect with you separately on the phone. Okay. So write me an email and we'll talk about it. Right? Whatever questions you have. So Ravi, you are done with your questions, right? Yeah.
Yeah, thank you. Yeah, done it.
So yeah, anybody else has questions? So I'll just type out my email ID over here for any of you to, I don't know, note it down. It's not, I think it's already there on my website, but still I'll type out my email ID. So Milind, just write me an email and I'll connect with you. Right. Anyone else? Any questions?
Hi, Amey Bhushan here again.
Yeah.
Can I ask one? Yeah.
Yeah.
Just a question. Like apart from this normal equity and all, there's something called as SME stocks.
Yeah.
Any idea about it? I mean, I just heard like if you get hold of a good SME stock, you can expect it as a multi-bagger. It's not just like
Information
in few.
asymmetry बहुत ज़्यादा है SME में, ठीक है? You have to really study quite a bit. SME में एक्चुअली जाके करना पड़ता है. सिर्फ एक तो वो I think 6 months में एक बार financials आता है, साल में एक बार annual report आता है. Correct. So information asymmetry is used. Secondly, there is with very little money the stocks can be manipulated, right? You don't need, so if you want to manipulate bigger stocks, Brightcom type stocks manipulate करना है तो थोड़ा ज़्यादा पैसा चाहिए. इस type की companies को manipulate करना is relatively much lesser money is required, so manipulation is more. Having said that, a small percentage of these SME companies are really good and they have gone up like 10, 15, 20, 30x, right? In my opinion, so if you also see, this is a recent phenomenon, right? I think 2014-15 में SME IPOs वो सब आना शुरू हुआ है. There was a big bull market in 2017-18, and now there is again a big bull market today in 2022 in these SME companies, right? Research करके रखो, let the bubble burst in SME companies, right? उस pocket में जो भी high valuations है, let me not call it a bubble, high valuations अगर burst हो गया, उसके बाद खरीदो.
Okay.
You have to be very selective when do you want to buy. So there is this very excellent book by Jesse Livermore, right? So this, so let me tell you that story. So basically he is considered the greatest trader ever to have lived, right? So he basically shorted the 1929 depression, made tons of money, right? 4 to 5 times in his entire life. So he has started trading at the age of 10, 11 or something like that, right? It's like that story of Warren Buffett, right? He bought his first stock at 6 or 7 or something like that, whatever. So so he went bankrupt some 4 times in his lifetime. Ended up killing himself in 1933 by suicide, right? The name of the book is Reminiscences of a Stock Operator. So isme, what is there for a value investor to learn from it, right? So there is one statement that he makes, that in a bull market you buy and in a bear market you short. So in most cases, everything goes up in a bull market and everything goes down in a bear market. So if you are able to get the pulse of a bull market or a bear market, you end up making a lot of money. Now, my problem with this is that I don't think I can get that pulse so easily, right? But for SME stocks, I can get that pulse. That 2018 was a bull market, right? In SME stocks, 2022 seems to be a bull market in SME stocks. So I would rather want to buy during bear markets to an SME stock and kind of sell in the bull market after 3-4 years, or at least lighten my position in a way, right? Does that answer your question?
Yes. So do you deal with it? Do you deal with SME
I have
stocks?
not bought.
Okay.
Purely because I have not ended up researching any of those companies too much in depth and got the conviction. 2-3 companies I have looked at, but somehow.
Right. So just in case if you happen to deal with it, I mean, I'll be interested. So I don't know when you'll do that, but just a note. Yeah.
So I think you are a subscriber to my
Yes, I am.
newsletter and everything. So anything of that sort happens, I usually share a lot of stuff on my email and the blog and that kind of stuff. So in general, that is a good way to remain connected.
Okay.
So I think you're already there. So I'm just telling this for the benefit of the others who may or may not be email subscribers. So yeah, I think Anand has a question. Anand, please go ahead.
Yes, Amey. 2-3 small questions I wanted to ask. One is, as you rightly earlier described, the fall in IT stocks, right? It's a spectacular fall. Do you think that it is time for a contra bet now on IT? Because we see more so because I work in IT industry for many years, and my experience so far has been that we are not seeing the sort of, yes, there is a margin compression because salaries have gone high, the travels have resumed and all of that. But from a by and large, we are not seeing the demand decimation that the market is probably factoring in right now, because it has gone down. It is not really the kind of demand that we were seeing like 6 months or 12 months ago. But it has not like withered away either, right? It is not pre-COVID where you were expecting for a large company 6, 7, 10 less than in a mid or high single digit growth. So we are still talking about at least mid-teen kind of a growth, high teen to mid-teen kind of a growth in general. And no company actually, if you see, even HCL Tech or Infosys, so giants of the Indian IT industry have not come out and said that anywhere that, or at least not in my knowledge, that we are seeing substantial headwinds here in the industry, and margin impact has been factored in by and large. So
is there any specific company that you're talking about?
Yeah, I mean, I have few, like for example, HCL Tech, I track actively because I see some tailwinds on ER&D, etc. And there are some mid-tier companies like LTI and others.
Let's see at, so you're talking about LTI, right?
Mm-hmm.
So let me just quickly share my screen. Let's have a look at LTI.
Yeah, LTI and also Persistent, if you can also look at it, if possible.
Yeah, anyone. So let's look at LTI, for example, right?
Okay.
So what has happened is, so its profit margins quarterly have increased from 18 to 23, 22, 24% and gone back to 18% in the latest quarter. If you look at yearly margins, they are around 20%. So yeah, what you say is probably right. Margins are more or less fine. If you look at sales growth, I think sales growth has also been fine. Now you look. So what I'm trying to gauge is pessimism built into that stock.
Yeah.
Right. So so the thought process is the situation is not as bad as what the price is reflecting. Right. That is your entire thesis. So I'm trying to gauge. Yeah. So I'm trying to gauge for this particular stock if that is true or not. So if you look at this, if the PE ratio, if you look at the last 10-year PE ratio, then what the PE ratio used to be like 11, 12, 27, 19, it's still 31, 32, 33. It has come down from 60 to 30, I agree.
Yes.
But is pessimism built? Can you call it pessimism?
I mean, in mid-tier, the ratio is still relatively higher. But if you see the top tier company, for example, HCL Tech, 10-year, it is around its 10-year average PE.
तो बड़े कंपनीज में रेवेन्यू ग्रोथ भी आएगा ना. सी विच कंपनी विल कम एंड टेल यू इन एडवांस कि मेरा डील मिल नहीं रहा है भैया. एवरीबॉडी लिव्स ऑन होप, राइट? इस साल 20% ग्रोथ, चलो नेक्स्ट ईयर थोड़ा कम होगा, 15% तो हो ही जाएगा. अदरवाइज व्हाट यू आर बेसिकली ट्राइंग टू टेल इज, जो मैंने बजट बनाया है सबको किसी को इंसेंटिव नहीं मिलने वाला. आपने सीईओ ने बजट बना के सेल्स लोगों को टारगेट दिया है ना 15% ग्रोथ का. 15% से ज्यादा ग्रो करोगे तो मैं तुमको इतना तो बोनस दूंगा. तो तुमने इन्वेस्टर्स को एक साल पहले ही बोल दिया नहीं भैया इस साल तो 5% ही ग्रोथ होने वाला है. तो तुम्हारा सेल्स वाले सब गल गए ना, बोलते क्या यार सीईओ ही बोल रहा है 5% ग्रोथ, तो अभी मैं डील के लिए क्यों इतना फाइट करूं. So nobody is going to tell you in advance.
Right. Right, but what about maybe for example Accenture results, right? Accenture outlook, you know, एक साल out जो उन्होंने दिया है, that is also, you know, reasonably okay. I mean, it is still a mid-teen kind of outlook दिया है उन्होंने.
See, particular decision, Anand, you take. What I'm trying to tell is this: look at extremes. So make a guess whether this is extreme. Okay, whether the pessimism is extreme, but the situation is definitely. Anand, so what I'm trying to tell you is, try and buy at extremes. Don't try and buy because it is slightly better than average.
Yeah.
So investing is about trying to answer, finding simple questions to answer. It's not about trying to answer difficult questions. It's about trying to find the questions which are simple to answer. If you find those questions and they're simple to answer, answer तो ढूंढने की जरूरत नहीं है ना.
Correct.
आंसर तो पता ही है आपको, इतना तो आपको पहले से पता है. तो in my opinion, IT is still in that, in my opinion, okay, it's still not in that extreme pessimism zone. Though I completely agree कि it is time to start looking at it. Maybe even buy a little, I don't know.
थोड़ा बीज में या ऐसा में इन्वेस्ट कर सकते हैं in small quantities and see what how it transpires. Yeah.
But yeah.
And दूसरा एक क्वेश्चन था अमय कि आप typically, so when you shortlist a stock to invest or research, आप typically ये superstar जो bets आशीष कचोलिया है, for example, now he has invested in ethos or some such, you know, companies which are not in a normal investors radar. तो आप वो देखते हो या or maybe you can, you know, let me put it other way, आपको उसमें कोई red flag लगता है to follow such some of the bets of these guys? I mean, for a retailers like us or like me, for example, I mean, कि आपको लगता है कि, you know, you can follow, but you have to be careful on ABC aspects.
See, you can take inspiration from anybody and everybody, but the point is, the analysis has to be your own.
Right.
So you may get to know about that company from Ashish Kocholia or Vijay Kedia or anybody else. उसके पहले पता ही नहीं था मेरे को ऐसी कोई कंपनी है, right? Which is fine. आशीष कचोलिया से पता चला, but buy क्यों कर रहा हूँ, that has to be your own reasons. Reasons cannot be, so Ashish Kacholia owns these stocks cannot be 50% of the reason.
Yeah. Understood.
You got that idea from Ashish Kacholia, which is good, fine. But Ashish Kacholia खरीद के पोर्टफोलियो में है इसलिए मैं बाय करूंगा. That is not the point.
और कोई आपको ऐसे रेड फ्लैग लगता है कि आपको मतलब आफ्टर रिसर्च भी मतलब क्यों, फॉर एग्जांपल लाइक आशीष कचोलिया ने 50 में खरीदा होगा, वी गेट टू नो एट द एंड ऑफ द क्वार्टर मे बी व्हेन द कंपनी डिस्क्लोजेस कि हाँ इसका स्टेक अभी 1% से ऊपर आ गया तो डेटा दिखने लगेगा. तो ये सिचुएशन आपने कभी देखा है कि यू नो the price that they pay and the price that we pay, we have to be careful there as well?
Obviously, no. So that completely depends on what your analysis of the stock is, right? So he may have bought at 50, but your analysis is कि मैं 150 भी खरीद सकता हूँ. अभी वो I think वो आशीष कचोलिया था, कौन था जो जिसने अवंती फीड्स खरीदा था? हिडन जेम्स ऑफ इंडिया, आशीष चुग है शायद वो, ऐसा कुछ नाम है. तो वो तो 500 टाइम्स हो गया स्टॉक 7-8 साल में. तो आपने उससे 10 टाइम्स ज्यादा भी दिया था तो भी आपने बहुत पैसा बनाया. लेकिन द पॉइंट इज उस प्राइस पे आप खरीद सकते. आपका एनालिसिस क्या बोल रहा था उस पॉइंट ऑफ टाइम पे कि खरीदना है कि नहीं खरीदना है उस प्राइस पे? That you have to be clear on. So I know somebody, okay, who is a shrimp feed distributor, okay, himself. So somebody in Odisha. So I happened to get connected with him. He told me at that time when that Avanti Feeds guy was actually growing, he was growing by giving massive credit. तो ये लोग जो डिस्ट्रीब्यूटर थे वो उसको बुद्धू समझते थे कि तुम्हारे कॉम्पिटिटर्स क्रेडिट नहीं देते, तुम साला क्रेडिट दे रहे हो, इसका मतलब तुमको डेस्परेशन है ग्रो करने का, इसलिए तुम ज्यादा क्रेडिट दे रहे हो, राइट? कोई एनी एफएमसीजी कंपनी, व्हाई इट गिव्स मोर क्रेडिट? बिकॉज दे थिंक दैट माय ब्रांड इज, सो HUL विल नेवर गिव क्रेडिट, राइट? बट द सेकंड रन जो ब्रांड होता है वो क्रेडिट देता है ताकि हायर मार्जिन देता है. HUL देगा तुमको 5% मार्जिन, दूसरा ब्रांड देगा तुमको 25% मार्जिन. डिस्ट्रीब्यूटर क्यों देता है? क्योंकि उसको पता है मेरा ऑफ टेक नहीं होगा, राइट? सो दैट इज द जनरल परसेप्शन इन द डिस्ट्रीब्यूशन चैनल. तो उसने मेरे को बोला, हम उसको गधा समझते थे, लेकिन वो स्टॉक चला गया 500 टाइम्स अप, right? So what I'm trying to tell you is this assessment you have to make for yourself. Now that distributor was wrong. His assessment was wrong. He looked at only credit data hai, baki so many other factors he didn't look at. So he never ended up buying the stock. In spite of being in that industry and being in that business and actually supplying Avanti Feeds, being a distributor for Avanti Feeds, right? So it works both ways.
Yeah. Okay. Thanks.
I think Ashish, yeah, you can ask your question.
Yeah, my question was on the real estate sector. So real estate is considered to be a more cyclical sector. Sometimes cycles are pretty long, but this time the understanding is it's more of structural because supply being taken out, a lot of players exiting the market. So here are two things. One is should this sector be approached more as a basket because the complexity involved, revenue recognition, etc., different cash flows also will not tell you the true story. Disclosure levels vary between players in terms of you are trying to derive the numbers from their presentations. So one is a basket kind of an approach for this sector, and whether you believe this is more of a structural phenomena which will be there for maybe 5-10 years, because recently you will have the mortgage rate rising, the cost going up. So will that growth sustain is the other aspect.
So sorry, you're asking about real estate sector, right?
Yes.
Yeah, so just briefly, sorry, I got distracted reading the chat messages. So just quickly in 10 seconds, ask your question again.
Yeah, so is it a structural story in the current point in time? It always used to be believed to be a cyclical story. So the structural story with the supply getting taken out, will it sustain? Second, the recent interest rate increase and cost increase. So does it act as a dampener for the sector? And should a basket approach be taken because of the varying revenue recognition policies and various levels of disclosures, etc.?
So in my opinion, real estate is cyclical and it's a long cycle. So 6 महीने का cycle, 1 साल का cycle नहीं रहता है. So almost 10 साल का cycle रहता है. ठीक है? So between 2012 and 2020 was a bad cycle almost everywhere in India, except maybe Pune and Bangalore. Again, Bangalore to a lesser extent. So we are definitely in an upcycle, which typically lasts for a long time, like 5, 7, 10 years. The problem is whether it's a strong upcycle, mild upcycle, whether it will happen in the the strong increases in prices whether they will come in 1 year or after 5 years. That's a very big question mark that everybody has. So the way I look at it is this: either I will make so in the next 7 years, if I'm invested in real estate, so either I will make 2x or I'll make 10x. If I make 2x in 7 years, is it a satisfactory outcome? I think it's a satisfactory outcome. 10% CAGR hota hai approximately, which is better than FD, na? So it's a satisfactory outcome. If it becomes 10x, balle balle, right? So the way I am doing it is sometimes I keep buying every month. So it's like a SIP in real estate stocks. So that what ends up happening is, so it's like an upside, but that upside is also like a sinusoidal wave. You will have downs for a few months, ups for a few months, right? Like after interest rate hike in the last 3-4 months, real estate stocks have gone down. There is a perception ki nahi, shayad upcycle itna strong nahi hai and all that stuff. So I keep buying every month, something like that, every 3 months, something like that, right? Basket approach definitely does make sense. Buy into 2, 3, 4 companies if which you are confident about their ethical business practices and strong brand and execution capabilities. So real estate is a very bad sector. Both black money or ye sab chalta hai. So you have to be sure ki the companies that you are buying into are relatively clean. That is what your this thing. So I think So the Dharma Venkatesan wants to. So Ashish, did I answer your questions? Should I move on to someone else?
Yeah, just to follow up on that. So if the main sector does well, the ancillaries are also supposed to do well because proxy to the RE, a lot of people don't buy because of the black money and other issues. A lot of people invest in the
But
ancillaries.
ऐसा है कि अभी जैसे सेरा वगैरह है, तो they are not very cheap ना, they are already quite expensive.
Yeah.
I don't know, right? So you have to trade off on that. In my opinion, upcycle बहुत आता है. Real estate में upcycle है तो best way to play it is real estate stocks. But you need to have high tolerance for volatility and a very long investment horizon.
Sure.
So you just look na yaar, 2003 to 8 में there were so many 100 baggers in the real estate stocks. So many 100 baggers, man. Right?
Sure.
All these Unitech, DLF, Parshvanath, so many. Even some company like Eldeco was a kind of a 100 bagger, I think, in the last 15 years or something. So if the upcycle really comes, you are like done. I mean, you will end up making a lot of money. Otherwise, you'll make fine 10% returns. Okay. Okay. Right?
Sure. Sure.
So yeah, the Dharma Venkatesan. Do you want to ask your question?
Am I audible, sir?
Yes, yeah, you're audible.
Yes, sir. Thank you for the opportunity, sir. So I have two questions. First question is on the EPC space. So I was reading an interview from Kenneth Andrade, sir, actually. So he was actually mentioning that most of the EPC players are currently debt-free and their competition has been, like most of the inefficient players have left the market and they have very good order visibility for the next 3-4 years. So what is your view on this EPC space?
He's correct. He's correct. Order visibility is there. Uptick is there.
And most of them have a very clean balance sheet. Like I was going through some companies and they have reduced debt, or even if they are debt, they have very minimal debt. So, and most of the broader market is not looking into this, because if we look at the valuations and the PE multiples which are being at which these companies trade at, it looks like there are a lot of pessimism into this particular sector. So how do you look at it from your
I think capital goods is doing fine, right? I mean, which companies are not doing well in capital goods? Most of those companies have gone up.
No, sir. I was asking about EPC companies.
EPC companies में issue ये है कि they are not very strong business models. Their margins are low. I mean, they are not very good businesses. The point is, what happens is if a cycle like 2003 to 8 repeats, then there is so much. So something like what happened to IT, right, in 2021. So many work orders were there, but no people to execute. Same thing happened in infra and EPC companies in 2005, 6, 7. Like literally people were switching jobs 100% raise immediate, right? So that kind of scenario, if it happens, they will go up. Otherwise, they are not very strong business models.
Okay, sir. Okay.
Revenue. So receivables becomes a problem. Many times margins get squeezed. Some error happens in execution. You have to bear the execution risk. Delays happen. You have to bear them. For what? 6-7% margins, 8% margins. They are tough businesses. They are not like fundamentally great businesses.
Okay. And my second question is regarding a stock specific question. So it's about JM Financials. They are into multiple verticals, but they are also into real estate financing. And in the real estate financing space, there are 3 major players, and one has gone for a merger with the parent bank, and the second is already in. There is a new management taking over and whatnot. We don't know what are the exactly issues which are present with the book. So these guys have a clear runway for growth. They have a very less leverage ratio, and they have other side ancillary. Though broking businesses are cyclical businesses, they have a very good revenue visibility there. So, but they still trade at below book values. So I just wanted to know your view on this particular stock.
What is their cost of funds?
It's around 8 to 10%.
No, 8. There is a huge difference between 8% and 10%.
Their real estate side, it's around 10%, and they have a home financing division, like retail home financing division, which is around 8%.
For retail home finance also, I think the cost of funds of 8% is quite high, right?
Yes, sir. But in affordable space, most of these players, except for like let's say Avas Financials or those kind of companies, most of these guys are having around 80%.
No, so in my opinion, what happens is, so what are the NPA levels? I have studied this company, so I'm asking you the questions, okay?
Okay, sir.
What are
for their retail home financing NPA levels, the gross NPAs are below 1%. For their real estate financing NPAs, it's around 4%, but their leverage ratio is 1x. So that is also
return on equity only 6%.
Because they have 3 other businesses which are into broking. They are IPO managers. So
broking is an extremely high ROE business, right?
But it's a cyclical business, right? So because they are into asset reconstruction, they are into broking.
No, my question is, why is the return on equity so low? Any investment banking or a broking business is a very high return on equity business.
Yes. So what happens is that during like if now the last 2 years the broking did well, but they faced stress in the real estate financing side. So when one cycle comes up, other comes down, and it kind of evens out each other.
So, okay, I have not studied this company, so I'll put it this way. If you want to go below HDFC Bank and Kotak Bank, you have to really study the inside out of the company. Okay.
Okay.
You need to be know more than almost everybody else.
Okay, sir.
Okay. Because I have not studied this company, I won't be able to tell you, give you an answer. So fundamentally, what is happening is the best of the best customers are taken away by HDFC Bank. If you are an RBL bank or an IndusInd bank, you end up servicing or an IDFC bank, IDFC first, you end up servicing the slightly poorer, less lucrative customers. Nobody goes to an IDFC first bank instead of going to an HDFC bank. Okay. So, or you have to be in a field where HDFC bank does not want to be there, like gold financing or microfinance or something like that, where the big daddies don't want to compete.
Yes, just that here is something I would like to add, because of the merger with HDFC and HDFC Bank, the HDFC management has come out and they have said that they don't want to consciously increase the real estate financing per se from here on. So that's why I got it.
HDFC is already 100 times JM Financial in real estate. So they don't want to increase 100x to 200x. That is what they are saying, but they will still be 100x of JM Financial in real estate financing.
So they're already a bigger bank.
They will already 100x.
Yes. Okay, sir. Fine. Thank you.
Don't think that because they want to slow down their growth rate from 15% to 5%, suddenly all the business is going to come to JM Financial. It's not going to happen.
Yes, sir. Yes, makes sense, sir.
And those who don't, so those real estate players whom HDFC does not lend, they go to Piramal and JM Financial and the others, and the Edelweiss and these guys, right? Which HDFC does not want to lend to. So if HDFC, so that's why I said, if you want to go to financials, then you go to gold lending or microfinance or some such niche where others don't want to be there, don't want to grow.
Okay, sir. Got it.
They're not present at all. Right? Bajaj Finance has overtaken HDFC Bank in which vertical? Corporate finance mein, home loan mein kiya hai kya overtake? Nahi. What did they do? Consumer lending. So they just didn't go where HDFC Bank is. And HDFC Bank को समझ में नहीं आया कि ये भी मार्केट है, अरे कंज्यूमर फोन को भी करो, वो लेजर सर्जरी आई का वो लेजर सर्जरी भी नोज ट्रांसप्लांट को भी तुम फाइनेंस करो, ये सब समझ में नहीं आया एचडीएफसी बैंक को, तभी बजाज फाइनेंस बन पाया. अदरवाइज दे वुड हैव बीन अ वेरी पुअर नंबर 2 to HDFC Bank, right? HDFC Bank would have easily defeated them in wherever they compete.
Correct. Yes. Thank you, sir. Thank you.
Yeah. So yeah, I think Nitin has some questions. Nitin, you have typed it out. So what is my view on MNGL? MNGL is not a listed company. MGL is a listed company. So that is Mahanagar Gas Limited, Nesco and Copran. So I think first I'll answer. Copran, I have no clue what company it is. So I won't be able to tell you what, I don't have an opinion. Nesco, I think more or less, it's a slow grower kind of a company. 20 P is a reasonable P to give to this company. So where is that extra growth coming from? That is my big question mark, right? Predictable cash flows, land asset उतना ही है, नया कोई business चालू नहीं कर रहे, वही है, they are converting their land into offices, IT offices. Next 10 years they will keep doing that. So it's fine. I mean, more or less it is priced in. So it's not I don't think it's a slow grower kind of a company. So you buy it at 10p and keep holding for 10-12% returns, you hold. Again, MGL Mahanagar Gas Limited, I think their expansion is an issue. Otherwise, the company is very solid. In Mumbai, the P ratio is also reasonable. All that this is there, but the substantial growth is not there anywhere, in my opinion. So will the profits become 5x in 5 years or 10 years? I don't think so, right? So in whatever these the new rounds of this thing has happened, these city gas distribution rounds have happened. I don't think they have won too many of those city gas distribution. So the growth is a big issue for MGL. You have another question. What is your view in asset allocation in sector wise in your portfolio, and view and believe on average in stock? So I don't understand the second part of your question, but I don't have any set asset allocation towards particular sectors. I am happy having 100% of my portfolio in a particular sector or a company. I don't do that in a particular company, but I don't mind being in a particular sector for any. I mean, that's not a problem for me, right? If my assessment is that that is the best investment at that current point of time. So I don't have any set rule that so 20% has to be financials and 15% has to be pharma and this has to be that and all that stuff. So if you want to unmute yourself and ask you the second part of your question, Nitin.
Yeah, thank you. Thank you. So just that you mentioned rightly, I want to understand the asset allocation view or average. Any stock go below 50%, are you averaging that? Or you suggest or you believe in that? Are
you saying averaging down?
Yes.
So are you telling me that suppose I buy a stock, it falls by 30, 40, 50%, do I average down or not? Is that what you're saying?
Yes. Because so most of the fund manager, when I listen, they don't believe in this small cap.
Don't believe in what?
Averaging the stocks.
No, it depends on a case-by-case basis. Okay. So it depends on whether your assessment of the business is better or worse. So suppose you bought a stock today. In March 23, 6 months later, the stock has fallen by 30%. Now, do you have some more new information which convinces you that this business is actually stronger than what your initial assessment was? Or you have very strong views to believe that there is absolutely no impairment in the quality of the business or business metrics or environment or anything of that sort. In fact, your view is that the business has actually become better in the last 6 months in spite of the price falling by 30%. Second, has it fallen from 100p to 70p? That is the question, right? So suppose it has fallen from 20p to 10p. And your assessment is that the business is actually better off now, today. Then you average down, right? Second, then other factors also come in. Like suppose it has already become 15% of your portfolio. Do you want to put 15% more? I mean, do you want to go beyond 15%? So for example, I own this care ratings, right? But beyond the point, I don't want the allocation to care ratings to go higher. So I have not made returns. My average purchase price is 550 or something 3 years back. I do continue to hold it, but I don't average down, right? I don't average down purely because I don't think that the business has substantially improved and, just averaging down will help me. So it's at an allocation, it's a small allocation, but it's at an allocation which I don't want to take higher. So I don't average down. But other stocks, I'm happy averaging down. right? Some other stocks I might be happier averaging down. So IX, I first bought when it was 180 or something, 175, 180. During Corona times, it fell to as low as 112. I definitely averaged it down. But the point was not, the purpose was not averaging down. The purpose was that I thought in this scenario, this is a very good business to own, and I am happy giving a bigger allocation in my portfolio to this particular stock. So then I
Okay, great. Thank you.
So Sarang is asking that I have invested. So first is Prem Prakash, pharma sector, I have no clue. Okay. So I can't answer that question on pharma sectors. Sarang is asking, he's invested in Indiabulls real estate. Should he hold, buy, sell? What needs to be done? My answer is I don't know. Don't get into situations where your conviction is going to be questioned just because the stock price has gone down. That is not the way to invest. You have to have an independent thought. Either please hire a financial advisor whom you are comfortable with and trust, so that whatever mistakes are supposed to be made, that financial advisor will make. It's not your responsibility. You pay the fee and then get whatever returns your financial advisor makes for you. Typically, your financial advisor will be more experienced and will have a better process of selecting stocks and buying into equities. So the mistakes will not be as punishing as what might be when you try and select your own stocks. Right? The very fact that you are asking this question it tells me that it makes you very uncomfortable in the current situation looking at those losses, and you are not. Your study of that business is lacking. So Samed, you are asking this question: how do you build the courage to buy during pessimistic time and going against the crowd? Sometimes it will take time to change people's perception on that companies. How do you hold during that time? So अभी वो मेरे personality में है. You see, I am not a consensus man. So so अगर पार्टी में जाओगे तो मेरे आसपास I am not the center of the attraction of that party, right? So it's not that I have मेरे को fan following नहीं. I have, so it's built into my personality. I do look at stuff where others don't want to look at or scared to look at, or just have that perception that that's a bad space to go into. I am an explorer, so I explore. After I explore, if I find some situation which is advantageous to me, I buy into it. So that's a personality trait. Beyond a point, you cannot learn these skills. If this is not a personality trait for you, then you should do a different kind of investing. Wait for things to get better. Let physical evidence of turnaround come, then you buy. So buy at a higher price, make lesser money, but be more sure of making that money. Second, it depends on your knowledge and the depth that you have gone into the business. So if you have studied the business more than what the others have done, you have certain insights of what is happening, why it is happening, and what may change in the future. So I'll give an example in this. So 1 year back, there was a lot of pessimism around whether Ujjivan will be able to raise equity capital or not. That is why there was a huge discount between the parent company and the bank, right? So what the market was essentially saying that Equitas will be able to merge, reverse merge, but Ujjivan will not be able to do that because they will not be able to raise QIP money. So I studied who else has raised QIP money at what valuation. And I could clearly see, based on my simple analysis, that far worse companies have raised bigger money than what Ujjivan needs to raise, and at terms which are much more stringent than what Ujjivan is willing to sell at. So the question was not will the QIP happen? The question only was when the QIP will happen. It happened 8 months later than what I had wished or hoped for, but the QIP did go through. So because I had studied other such businesses, I was not having a problem holding on to Ujjivan for the past 8 months, even though the price was not moving. Right, so that answers the question, I think. So I think I'll take last 1 or 2 questions. If anybody still has some questions, please unmute yourself and ask.
Hi, Amey. Ujjivan now raise 11.90 rate of return the deposits from the investors. So do you think that impact of profit or they are taking huge risk of collecting money from the market of this rate?
So their average yield is about 18%. That is what they lend at.
Okay.
Compared to that, they still paying 12% for tier 2 bonds, though it is much higher than, frankly, even my estimates. It's not a losing proposition because it is considered as equity capital. So if they have raised 300 crores of tier 2 bonds, now they have a capability of lending 8 times that. So they will take deposits at 6.5–7%, and they will be able to lend 2,400 crores extra because they have a higher capital adequacy ratio now.
Okay.
Right? So paying 12%, not making any profit on that 12%, because you paid us such a higher interest rate, is still a profitable strategy because now you can increase your loan book, take deposits at 7%, and still earn a handsome net interest margin of 11%. Correct?
Yeah.
So see, secondly, the problem that was happening was the perception of the market was इनको तो कोई पैसा देगा ही नहीं. Nobody will give them money. That was the perception. But the problem was not nobody will give them money. The problem was at what rate they will give the money. So 12%, people were not willing to give them tier 2 bonds at 10%. They were only willing to give at 12%. To pay their 12%. So अछूत नहीं रह गए ना अभी. They are not untouchables anymore. People are willing to do a business with them at some price. That was very important. In a financial industry, not being untouchable is very important. You need other players to do business with you. Right? Somebody is asking, will we, this session I will upload on YouTube in a few days. Okay. And I'll send out an email also to everybody. Yeah.
And one more question, that the employee cost of Ujjivan is more than the other businesses. Have you gone through that?
More than which other businesses means which other companies are you?
Other and yeah, yes.
Like
other NBFCs in their competition.
You have to compare with microfinance. Microfinance is a very people-intensive business. So if you compare it with other microfinance players, I don't think it is higher. If you compare employee, whatever business per employee or something like that, I mean, you have to go into. The point is, microfinance business is extremely employee intensive. So don't compare it with Shriram Transport Finance or something like that, where the average ticket size of the loan is 5 lakh, 6 lakh, 7 lakh, and the collection team doesn't have to be so big and all that. So like to like you compare, I think is more or less in line with the industry, the employee cost.
Okay.
You compare it with Credit Access Grameen, Equitas, or those kind of companies, or Bandhan Bank. Compare it with that, and it's in line. Okay, just last opportunity to anybody who wants to ask a question. Otherwise, we'll wrap it up.
Pharma sector view, can you just?
No view, man. I don't study pharma. Absolutely no view. Right?
Hi,
Shreyas, you want to ask some question?
Yeah. I just want your views on wind energy sector. I mean, recently some developments happened, so I just want to know your views.
No, so what developments happened, please?
Like they have done away with that reverse bidding. I mean, the auction process of.
So that is positive, no? That is positive.
In that view, like whether we will see the.
Remind me what that development is, and I'll tell you my view.
Earlier they were, calling for that auction-based pricing, but now the government has scrapped that.
And what new thing has come? What they have replaced it with?
Replaced it with, I think, the earlier model of like fixing the price and then giving it to the calling for the bids.
No, so I don't think they will go back to fixed price model. Cost plus model they will not go back to. But the problem in the last 5 years with this competitive bidding was that there was huge fierce competition between players, and the prices discovered were like really low. And then what ended up happening was that 2 years later, after the person has won the bid, now they realize that at this price, if I supply electricity, I will keep making losses for the next 25 years. So the number of plants after winning the contract from SECI, which actually came up, is I think that number is only 30-40% or something like that. Right?
Okay.
The government realized that this model of pure competition in wind sector seems to be having some problem. Now, I haven't read up with what exactly has it got replaced with. But they will come up with some hybrid model. So you look at the road sector, right? So in road sector, up to 2010, lot of build, operate, transfer projects were there. So you only spend, you only collect the toll for 20-25 years and then hand it over to us, right? So financial risk you take, execution risk you take, project risk you take, every risk you take. The other extreme is EPC. You have to take no risk. I'll give you money at the end of every month. You have to just go and construct. I'll give you land. I will give you money. I'll guarantee you margins. You have to only take project execution risk. That is EPC. Then there was something called hybrid annuity model, right? So the road sector came out with hybrid annuity model. So some part of it I'll pay you. Some part of it you will have to raise funds from the bank and take it on your own balance sheet. So you'll have to also take some equity risk. At the same time, I will also make sure that you get a certain amount of guaranteed revenue every year, right? Irrespective of what the traffic on the road is.
Okay.
I think
so,
government will come up with some hybrid model which will work both for industry and work towards reducing the cost of electricity.
Okay. The reason why I'm asking is, I read somewhere that in 2016-17, 4 to 5 gigawatt of wind energy was being installed. But after this clause came and it has gone down to 1 to 1.5 gigawatt, which is still continuing. So probably now with the scrapping of this clause again, whether it will go back to that previous capacity installations. So there any opportunity lies?
They have scrapped it precisely because they want to take it back to 5,000, 6,000 megawatt per year.
5,000, yes.
Yeah.
So
because they realized that because of this policy, 5,000 came down to 1,500.
Correct.
So the change in policy ended up harming rather than helping.
Okay.
So now 2022, they want to correct that error.
Okay. So in this scenario, whether there is any investment opportunities, Sangvi Mover is one beneficiary.
Sangvi is there, Inox Wind Energy is there.
Inox Wind Energy.
Don't go for
whether
Suzlon,
we'll
please.
see the revival of Suzlon.
Don't go to Suzlon, please.
Okay. I was looking at one small stock, Synergy Green, where they do castings of wind energy sector.
No, you go to slightly bigger, better companies which have better balance sheets and ability to grow.
Okay.
Don't go for marginal players with 50, 100 crore of revenue. Don't go to marginal players.
Okay.
What? They don't have any profits, man. The maximum profit they have made is 5 crores in 2019.
Yeah. No, I understood. Because they are investing. They're expanding their capacities. And I read in their presentation and they said that they are the only second biggest player after Suzlon. Suzlon has their own subsidiary where they do their own castings. Okay. Even INAX and then Gamesh.
I'm reading it on what products are there. They are not some great products. Gearbox housing, main bearing housing, wall body ways. These are छोटा कुछ बना रहे हैं यार. ये लोग wind turbine थोड़ी ना बना रहे हैं. Windmills के parts बना रहे हैं. Job work कर रहे हैं. They are not able to make the entire turbines and that stuff.
Understood. No, the reason why I'm looking at this company is because that Kenneth Andrew, he is invested in that. MIT fund is invested in that. So that's the reason I'm just studying it. I don't blindly go behind all these things. But
so my opinion is this, okay? In these kind of strategies, you have to go at better companies, man.
Understood. Yes.
I don't know. I haven't studied this company, so you look at it. Don't go for chota companies. Go for companies,
Okay.
you know, infra sector mein. Look, don't go for the biggest, but don't also go for a very small company.
Okay.
That is all that I'm saying.
Sure.
Yeah.
Thanks.
Hello. Thank you so much, guys. I think most of you have waited for 2 hours. Manthan, yeah, I think Manthan has been asked. So let me take this last question. Manthan, yeah, please go ahead, ask a question.
Yes, sir. Hi, I'm really
Be a
thank you
little
for the
louder, Manthan.
opportunity.
Manthan, be a
Yeah, am
little
I
louder.
audible now? Am I
Yes.
audible?
Yeah.
Yes, I want to ask a view on battery manufacturers, maybe Amara Raja Batteries and Exide Industry, and like could they be the proxy to electric vehicle play, like a kind of a structural theory? Like I know they are a better pair in a lead acid batteries, and like they are coming with expansion plans and starting building methodologies for lithium ion batteries also. And recently, Exide like sold off their stake to HDFC Life. They have a cash on the balance sheet. So, and they have like partnered with S-Volt for manufacturing of lithium-ion battery in Karnataka.
The question वही है ना? Question is, could they become the beneficiaries of lithium-ion batteries, right? If you look at world over, what ends up happening is that many of these car manufacturers themselves make their own batteries, right?
Right.
What used to happen? What used to happen before was no car manufacturer or two-wheeler manufacturer wanted to make lead acid batteries.
Okay.
Right? They were happy buying lead acid batteries for somebody. No car manufacturer makes its own tires. कोई करता है क्या? नहीं. But अब क्या हो गया? Electric vehicle में battery cost is 40% of your vehicle cost, and that's the most critical component. Right? So all these electric vehicle manufacturers are wanting to make their own batteries. So in my opinion, there is a big question mark whether Exide and Amar Raja will emerge out the winners in the battery space. There is a good possibility that they will, yes, but there is also a possibility that, you know, others will leave them behind.
Okay. But if they try to develop an integrated circuit like BMS, right? Battery management system, or like if they try to develop every module of that thing, like can it be outsourced? Like can OEMs outsource these entire functionality to somewhat like Exide or Amara? Like because if there is a slight chance of doing this, then they can like Exide and Amara can be used from this.
हाँ, they can be. वही मैं बोल रहा हूँ ना, can be है. अभी will be है कि नहीं देखो, आप सोचो. Definitely है क्या? आपको क्या लग रहा है? That is the question. That is what I am saying. You know, it may happen, it may not happen. So I'll show you one more thing. Okay.
Okay.
So let me show you the profit margins of Exide Industries versus Amar Raja. Right? So you go to profit margins, yearly profit margins पे जाओ. तो इधर क्या है profit margins yearly? 10, 11, 10. So this is 20%, but if you discount that, most of the other years, Amar Raja profit margins have been better than Exide. Can you see that?
Right. Yes.
10, 17, 13, 18, 12, 16, 11, 15, 11, 14, 10, 16, 13, 16, 11, 12. Why is that?
Right.
So my understanding is that Amar Raja is better in replacement market. And they make, so more money is there in the replacement market, not supplying to OEMs. Correct? OEMs will squeeze your margins.
Yes.
So Amar Raja became big because they have a higher share in replacement market, where they make higher margins. अब जब 40% of the lithium electric vehicle is lithium ion batteries, replacement market किधर है? OEM क्या बोलेगा? तुमने वो अमर राजा का बैटरी लगा दिया ना, तो टाटा मोटर्स का गारंटी खत्म. मेरी बैटरी लगाने का, नहीं तो किसी और की बैटरी लगा दिया तो खत्म, उसके बाद मेरे सर्विस सेंटर में आने का नहीं, मेरे को फोन नहीं करने का, right? So margins go away. So it's not that obvious that Amar Raja and Exide will win. That is what I'm saying. बाकी अपना study देखो. If you are convinced, buy.
Right.
So, but these are things that you have to look for.
And any other proxies for this automobile or EV industries, like other than direct OEMs still in India?
ये forging companies वगैरह है, but frankly I am also searching.
Okay.
I am also searching.
Right.
ठीक है guys. So thank you so much for joining and being a part of this. It's been a long 2 hours. I'll post this video on YouTube and then send everybody an email. Okay. Thank you everybody for joining. Yeah. Thank you. I'm ending the meeting.